Hello traders, welcome to another video. Take a look at the chart on my screen right now. If you're not able to identify what structure this is, then you need to watch this video. I'm going to start off by drawing an impulse leg from the starting point all the way to the initial structure low. Starting point right at the top there, initial structure low right at the bottom here. Now what comes next after an impulse leg? A retracement or an outside return or a pullback, take your pick, but I'm gonna call it a retracement because that is what most people are familiar with, and it's called a retracement because it shouldn't or it doesn't extend beyond the starting point. Now after the retracement we get another impulse leg, and we call this the new structure low because it's lower than the initial structure low. Now this structure is what you call a bearish structure. Now that the boring stuff is out of the way, how can you use this structure, these lines that I've just shown you on the chart, to make money in Forex? Now before we get into that, let me ask you guys a simple question. If you were playing a game, it could be any game, it could be a football match, it could be a board game, it could be a tennis game, what is the most important thing that you need to know before you play that game? You need to understand the rules of the game, right? Because if you don't know the rules of the game, then there's no way you have a chance of winning. It's exactly the same when it comes to Forex trading. You need to understand the rules of the Forex market if you want to make money in trading. So now that we've got a bearish structure, what are the rules of the bearish structure? The bearish structure has 3 rules. 2 of the rules for the retracement and 1 of the rules is for the new structure low. Now the first rule of the retracement line is that it needs to touch the 382 Fibonacci retracement line of the first impulse leg. So we're going to take our Fibonacci tool, we draw it from the first impulse leg all the way down to the initial structure low. Now the retracement line needs to come in and touch the 382 Fibonacci retracement line, which we can see it's the green one right there. Now it can go above it, but that's going to lead us into the second rule of the retracement. Now the second rule of the retracement is that it must not extend or go beyond the starting point. So we've got a starting point right here at the top, and we're going to put a little line there and make that a dotted line. So knowing those 2 rules of the retracement, we can create a rule zone for our retracement. So we're going to take a little box and we're going to draw the box that covers a zone between the 382 Fibonacci retracement and just below the starting point. So we've got a zone here, a rule zone, where the retracement needs to be at. Now let's talk about the third rule, which concerns the new structure low, or the NSL. So for you to have a new structure low, any part of the candle of the next impulse leg after the retracement must exceed beyond the initial structure low. Now there's no limit in terms of how far this goes, as long as it meets the condition I just mentioned. Now we can see that the market has met all those rules that I just mentioned, but this is where it gets really interesting, because now we have to apply those rules in market conditions, because every single time the market makes a bearish structure in a bearish market, there's a 90% chance that the market will repeat itself, will make another bearish structure. So basically what I'm saying is that you can expect the next move of this market to be a retracement, and knowing what we know about the 2 rules of the retracement, we can plan ahead, because we can expect the market to give us an opportunity to trade. So let's go ahead and make that plan. Now first rule of the retracement, let's bring in our Mr. Fibonacci tool again. We draw the Fibonacci from the start of the impulse leg to the end of the previous impulse leg, and let's mark out our 382 Fibonacci retracement. Now second rule of the retracement is that it must not go beyond or extend to the starting point. Now we're going to use our retracement, our previous retracement, as our new starting point. So now let's create a rule zone. Let's bring in our little box again, 382 Fibonacci retracement to just below our previous starting point. So now that we've created a rule zone, the expectation is that the market will come into this box. It will retrace into this box, and at some point it's going to form the next impulse leg, which is going to go down and break the previous structure low. And that's where you need to be if you want to make money in trading. So now we can see that the market has done exactly what we predicted. And guys, this is what trading is about. The market went down and formed a new structure low. So if you want to be able to make money in trading, you need to be able to understand the rules of the Forex market. Just like I gave an example with the game. Like if you don't know the rule to a certain game, do not expect to win. The same applies when it comes to trading. So guys, you have to be able to take your time to understand, to learn a particular strategy, to know the rules of the market, to know the rules of that particular strategy before you go in and try to apply it into trading. Now I do have a brand new service that I'm offering. Let's head over to my website. It's called the Zoom group classes, and I'm going to be doing this kind of analysis every single Monday. So it's going to run every week. So I'll be doing this kind of analysis, and not just on this structure, on bearish structure, but I'll be doing an analysis on price action, contraction and expansion, day trading strategy, looking at, reading trends and everything. So you can find all the information over there on my website. Now this is especially for those of you guys who want to learn how to read the market, or how to read trends, or how to be able to analyze the market and trade effectively. And the best thing about this service that I'm offering is that it's only going to cost you a one-off payment of £100 or £99. And these classes are going to run for an hour, maybe two, and it's going to be every Monday morning. And every single lesson will be recorded. So in case you are not able to attend the lesson, you're going to get the recorded session emailed to you. Like guys, I really want to help as many traders as I can, but I don't want you guys to be spending thousands of pounds of courses that are not going to really help you when it comes to trading. And this is affordable to everyone. But obviously some people might prefer the one-on-one private sessions, and obviously that's where you can get the price action course, where it's more detailed, and obviously you're going to be having one-on-one sessions with me every single week, and the lessons are all recorded as well. So you're going to get the copy of the recorded sessions emailed to you after every single lecture. Again, this is another course that is not going to break your bank account. It's only going to cost you $4.99. And if you're someone who is just looking to trade alerts, then you can join my WhatsApp trading group. And again, that's only going to cost you £9.99 a month. And you're going to get every single trade that I take on a weekly basis, every single day, daily alerts sent to the WhatsApp group every single day. So there you go guys. I think anyone who is willing to learn how to trade will see an opportunity and recognize it. So if you need any more information, based on the services that I've just explained to you, head over to my website. The link is in the description down below, and then I'll see you guys soon.